Hey everyone, and welcome to another deep dive into what's driving the markets. It's Monday, March 3rd, 2025, and we're going to break down all the forces at play so you can be ready for the week ahead. We've got two in-depth reports this time around, each with a slightly different angle on where things might be headed.
You know, February was a bit of a wild ride, wasn't it? That NASDAQ took a 5.5% hit. The S&P and the Dow both dipped around 3%.
Yeah, no kidding.
Yeah, that's a pretty stark contrast to how optimistic everyone was at the start of the year.
Totally.
Yeah.
It feels like February really threw everyone for a loop.
Yeah.
So now everyone's kind of on edge. Like, okay, what's March going to bring? Especially with all this economic data hitting us right away on Monday. We've got manufacturing PMI, construction spending, ISM manufacturing all before 10 a.m.
Right. Yeah, it's a total data dump. And it's important stuff because it gives us this real-time snapshot of how healthy the economy actually is. And manufacturing especially has been sending mixed signals lately, you know? So that ISM manufacturing report, I think, that one could really move the needle.
Yeah, absolutely. And then to add to all of that, we've got St. Louis Fed President Muslim giving a speech at 12:35 p.m. Eastern Time. Now, it's not an FOMC meeting, I get that. But Fed speeches, even on their own, they can still rattle the market, can't they?
Oh, absolutely, especially when interest rates are at the top of everyone's mind.
Yeah.
Every single word Muslim says is going to be analyzed. Like, what does it mean for the Fed's next move? Are they going to hike rates again? Will they pause? The markets hang on every syllable.
Yeah, it's true. Okay, but here's the real curveball for you, though. Tuesday, March 4th, those tariffs that have been looming for a while now, they're finally going to hit 25% on goods coming in from Canada and Mexico, and we're tacking on another 10% on top of what we're already charging for Chinese imports. To me, this feels like a real game changer.
It really could be. I mean, depending on what you're invested in. This is a move that has the potential to shake things up in a big way, especially in certain sectors. Think about those industries that rely heavily on materials from overseas. Their costs are going to skyrocket, which could really squeeze their profits.
Yeah, so lots of potential for volatility on the horizon. And as if that wasn't enough, the S&P 500 is kind of precariously balanced right now, near this crucial support level. We're talking about right around $5,970. What happens if we break below that?
Well, staying above that level is really key if we want to see the upward momentum continue. But if we drop below that, it could trigger a whole wave of selling, could push the market even lower. But then on the flip side, if we see a big surge in buying, the S&P could actually retest its all-time highs. It's a real nail-biter.
It really is. It's like watching a high wire act. Like, oh, yeah. Are they going to make it? And in the meantime, we've got the U.S. dollar is really showing its strength lately, which usually, I think that's kind of bad news for global companies and commodities, isn't it?
Yeah, that's usually the rule of thumb, right? A strong dollar means U.S. exports get more expensive, which hurts American companies that do a lot of business overseas. And since commodities are priced in dollars, a stronger dollar tends to push those prices down.
Oh, that's interesting. And remember how Bitcoin kind of took a tumble recently?
Yeah.
Is that connected at all to the dollar's rise, or is that just coincidence, do you think?
It's hard to say for sure, but it's something to think about. I mean, there are always a bunch of factors playing off each other in the market, but the dollar getting stronger, it could be putting pressure on alternative assets like Bitcoin.
Yeah. Okay, so much to keep track of. Oh, and don't forget, we've got earnings season starting to kick into gear this week. It's not peak season, I know, but there are still some pretty big players reporting starting Tuesday. We've got Ross Stores, Best Buy, CrowdStrike for the cybersecurity folks out there. Anything in particular catching your eye?
You know, I'm really intrigued to see what Broadcom has to say on Thursday. They're a massive semiconductor company. Their results, I think, could give us a peek into how the whole tech sector's doing. Remember NVIDIA's report a while back raised some eyebrows with those signs that demand for AI chips might be slowing down?
Oh, right. So if Broadcom is saying the same thing, we could be looking at a broader cool down in the AI space, which, that's been a huge driver for the market.
For sure. It's definitely something to watch. And it plays into this larger narrative that's been gaining traction. You hear this reindustrialization term being thrown around a lot lately.
Hold on. Reindustrialization. Break that down for me. What's that all about?
It's essentially this push to bring more manufacturing back to the U.S. And it's already influencing how people are investing their money. Taxing foreign imports, like those tariffs we were talking about, that's part of that strategy. The administration is also talking about cutting back on business regulations and really boosting investment in defense.
So are these tariffs the main driver behind this reindustrialization trend, or is it more complicated than that?
It's definitely more nuanced. I mean, tariffs are a big lever, no doubt, but there are other forces at play too. Technological advancements, global supply chains are shifting, there are even political pressures. It's a multifaceted trend.
So tariffs are just one piece of the puzzle. This is starting to feel like we're at a crossroads with different paths leading to very different outcomes.
You're spot on. And understanding these narratives, these stories that we tell ourselves about the market, that's crucial because those stories influence how everybody makes decisions, right? Investors, policymakers, even just regular consumers.
All right, so what's the dominant story right now? What's the narrative that's driving the market?
Well, there are a few narratives that are kind of competing for attention. One is that reindustrialization story, the focus on domestic growth, potentially even decoupling from global markets.
Okay, that makes sense. What else is in the mix?
Another big one is the Fed and interest rates. Will they cut rates this year? How is that going to impact inflation? There's a lot of uncertainty, and uncertainty is what fuels market volatility.
Right. And then, of course, there's this ongoing trade war, which feels like it's been simmering forever.
Exactly. That trade war narrative is all about protectionism and global competition and the potential for disruption. And that's a story that can really swing the markets back and forth depending on the latest headlines.
So we've got like three main narratives: reindustrialization, the Fed, and the trade war. It's like a Wall Street soap opera. Everyone's just waiting to see who comes out on top.
I like that analogy. And just like a soap opera, there are going to be twists and turns, cliffhangers, unexpected plot twists along the way.
Speaking of twists and turns, let's zoom in on those technicals for a second. The S&P 500, it's flirting with that $5,970 support level. What are the charts telling us?
Well, like we talked about, if it stays above that level, it could signal continued strength. But if it drops below that, it could trigger a sell-off and lead to a deeper correction. It all depends on whether the buyers or the sellers have the upper hand.
So it's like this battle of the bulls and the bears playing out right in front of us. What indicators are you watching closely?
I'm really keyed in on those moving averages, especially the 50-day and the 200-day moving averages. If those averages cross, that could signal a change in momentum. Could be bullish or bearish. Got to see which way it goes.
Okay, moving averages. Got it. What else is on your radar?
Volume is another big one. High volume on a price move, that tells you there's conviction behind it, whether it's a breakout or a breakdown. Low volume means there's hesitation, lack of commitment. Exactly. And when you combine those technical signals with the prevailing narratives, that's when you start to get a clearer picture of where the market might be heading.
It's like putting together a puzzle, right? Each piece of information helps you see the bigger picture.
That's a great way to put it. And just like with a puzzle, sometimes you have to step back to see how all the pieces fit together.
All right, let's do that. Let's step back for a minute and revisit the US dollar. It's been on a tear lately. And as you said, that usually means trouble for global companies and commodities. Can you break that down a little more?
Sure. So a strong dollar makes those U.S. exports more expensive, which hurts companies that do a lot of business internationally. Think about it. If a European company is buying stuff from an American company, those goods get more expensive as the dollar gets stronger. So that can actually reduce demand for American exports, which hits those companies' bottom lines.
And what about for commodities? Since those are priced in dollars, a strong dollar means what?
It means lower commodity prices. It's a classic inverse relationship. Think of it like this. If the dollar is strong, you need fewer dollars to buy the same amount of oil or gold or copper.
Got it. So is this strength in the dollar just a blip, or are we looking at a longer-term trend here?
You know, it's always tough to predict the future, but there are a few things supporting this idea that the dollar might stay strong. The U.S. economy is still pretty robust compared to other developed countries, and interest rates here are higher.
Which means foreign investors are drawn to those higher rates, so that increases demand for the dollar.
Exactly. And there's also this flight to safety thing going on. With all the geopolitical uncertainty around the world, the U.S. dollar is seen as this safe haven asset.
So a triple whammy: economic strength, higher interest rates, and a safe haven appeal. No wonder the dollar's feeling powerful.
Exactly. And it's something investors need to keep in mind as they're, analyzing different companies and sectors.
Okay, adding that to my mental checklist. Now, let's switch gears and talk about those earnings reports that are coming out this week. We've got Ross Stores and Best Buy. Those should give us a sense of how consumer spending is doing, CrowdStrike for the cybersecurity folks, and then, of course, the one you're most excited about, Broadcom.
Yes, Broadcom's report is going to be very telling. They're a major player in the semiconductor industry. Their results could give us a glimpse into the overall health of the tech sector.
And as you mentioned, Broadcom's results could shed some light on whether this whole AI craze is cooling down or not.
Right. NVIDIA's earnings report a little while ago, it did raise some concerns about slowing demand for those AI chips.
So if Broadcom is seeing the same thing, it could be a sign of a broader slowdown in the AI sector, which, that's been a major engine of growth for the market.
It would be a big deal for sure. It could potentially impact the whole market.
Wow. Broadcom's report is definitely one to watch. So much to unpack this week. Economic data, Fed speeches, tariffs, technical analysis, the dollar's rise, and all these earnings reports. My head is spinning.
It's a lot, but it's all connected. Each piece of the puzzle influences all the others.
Right, it's like a giant web with every thread intertwined.
Exactly. The key is to understand those connections, to see the patterns and the narratives that are shaping the market. That's what will help you make sense of it all.
And that's what we're trying to do here. Equip our listeners with the knowledge and insights they need to navigate this complex landscape.
Precisely. Knowledge is power, especially in the world of investing.
All right, knowledge is power, and we are dropping some serious knowledge bombs today. But before we get to our final thoughts, let's take a quick break. We'll be right back with more insights into the stock market outlook for Monday, March 3rd, 2025.
It's amazing how all these things, like tariffs, that reindustrialization idea, the dollar being so strong, it all ties together. And these earnings reports, I think, they could show us how these forces are actually playing out in the real world.
So let's connect those dots a little more. How exactly could these reports tell us if this whole reindustrialization thing is actually happening?
Think about it this way. Let's say companies like Ross Stores and Best Buy, who rely a lot on imported goods, right? What if they're saying their costs have gone way up because of those tariffs? That's a pretty good sign that those tariffs are doing what they're supposed to do, encouraging companies to get their stuff from within the U.S.
So basically, those earnings calls, they could be like a real-time checkup on how businesses are adjusting to all these new policies.
Exactly.
And what about Broadcom? How could their report fit into all of this?
Well, Broadcom, they're a huge chip maker. So if they're saying demand is really high for the chips that are used in manufacturing equipment, like robotics and automation, all that advanced machinery, that could be a really good sign for reindustrialization. It would mean companies are investing in actually producing stuff here in the U.S.
So we're not just looking at the profit numbers, we're also listening to what they're saying during these calls.
Right.
They might drop some hints about how they're planning for the future.
Exactly. And don't forget, this reindustrialization idea, it's not just a U.S. thing. This is happening all over the world. A lot of countries are trying to bring manufacturing back home and be less reliant on those global supply chains.
So these earnings reports, it's not just about individual companies. It's like a window into these bigger changes that are happening globally.
That's right. And that brings us back to why these narratives are so important. It's not just about the numbers, it's how people interpret those numbers, the story they build around them. And that's what usually ends up moving the market.
Okay, so narratives are key. But it seems like there's so much information overload out there. How do we cut through all the noise and figure out which narratives are the ones that are actually driving things?
You got to look for those patterns. If we see a bunch of different companies in totally different industries all talking about how those tariffs are impacting their business or how they're putting more money into U.S. production, that really reinforces that reindustrialization story.
So it's like looking for those echoes across different data points, right? Connecting the dots to see the bigger picture.
That's it. And also, think about who's telling the story. Are analysts picking up on these trends? Are policymakers using this language? The more widespread a narrative becomes, the more likely it is to influence how the market feels.
That's a snowball effect. The more it rolls, the bigger it gets.
Exactly. And that's why it's so important for investors to stay informed, to be critical thinkers, and to question those narratives.
All right, so let's put on our critical thinking caps and look at the S&P 500 again from a technical standpoint. You mentioned it's right near that $5,970 support level. Why is that number so important?
Support levels, those are basically price points where historically there have been enough buyers to overcome the sellers and stop the price from falling further. So in this case, that $5,970 mark, it's acted like a floor for the S&P 500, several times in the past few months.
So it's almost like a psychological barrier. If we break through that, it could be a sign that the sellers are in control.
Yeah, that's a good way to put it. And that's why those moving averages we talked about, they're so helpful. They give us a visual of the market's trend, helps us figure out if the buyers or the sellers are stronger.
Okay, so if the S&P breaks below that support level and those moving averages show us we're in a downtrend, that's like a double whammy, right?
It definitely wouldn't be good news for the bulls. But remember, technical analysis is just one tool. We need to combine that with, what we know about the fundamentals, the economic data, those narratives to get a complete picture.
It's all about putting those puzzle pieces together, right?
Exactly.
To make smart decisions. So we've talked about the risks. What about the potential upside? What would need to happen for the S&P to hit new all-time highs?
A few things. First, we'd need to see some really strong economic data, especially in areas like manufacturing and consumer spending. That would boost confidence in the economy's growth.
Okay, so a strong economy is key. What else?
Second, we need some kind of resolution to this trade war. If those tariffs were eased up a bit or even removed, that would probably spark a rally.
Less uncertainty, more clarity. That would definitely make the market feel better.
For sure. And lastly, we need the Fed to signal that they're not going to be as aggressive with raising rates. If investors believe that those rate hikes are off the table for a while, that could trigger a wave of buying, especially in those growth sectors like tech.
So, 3 things: strong economy, no more trade war, and a more relaxed Fed. Sounds like a recipe for a market boom.
It could be, but of course, in investing, nothing is ever guaranteed. There are always unexpected things that pop up.
Right, like that sudden drop in Bitcoin we talked about. Do you think that was just a temporary thing, or could it be a sign of something worse?
Well, Bitcoin is known for being volatile, so those short-term swings are normal. But it's interesting that it dropped right when the dollar was going up. It could mean some investors are shifting back to those traditional safe havens.
So when things are uncertain, the dollar is still king.
Seems like it.
Okay, interesting. But let's get back to those earnings reports. You mentioned Ross Stores and Best Buy as like a gauge of how consumers are spending. What specifically are you going to be looking for in their reports?
I'll be watching their same-store sales numbers. That tells us how well their existing stores are doing, which is a good indicator of demand. And I'll also be listening for any comments about pricing power. Can they raise prices without hurting sales? That would mean the consumer is in good shape.
Right, so strong sales and being able to raise prices, that's what we want to see.
Right.
That would mean people are feeling good about spending money. That would be good for the whole economy. Now, what about CrowdStrike? What can their report tell us about the cybersecurity world?
CrowdStrike, they're a leader in cloud-based cybersecurity. So their report, it'll give us insights into, how much demand there is for those services, which are really important in today's digital world. I'm going to be looking at how many subscribers they've added and listening for any comments on new cyber threats.
So if they're getting a lot of new subscribers and talking about new threats, that means businesses are taking cybersecurity seriously, right?
Yeah.
They're spending money on it.
Exactly. That would be good for CrowdStrike and the whole industry.
And finally, let's loop back to Broadcom. You said their report could give us a peek into the overall tech sector.
Yeah, Broadcom, they supply chips to tons of industries, smartphones, data centers, networking equipment. So their results, they'll tell us how much demand there is for those products, which are like the backbone of the global tech world.
So if Broadcom's doing well, that means tech spending is still strong, which is good for the market. But if they're not doing so well, especially with those AI chips, it could be a warning sign.
Exactly. Tech has been driving the market for years, so any weakness there could have a domino effect.
This is starting to feel like one of those choose-your-own-adventure stories,
Right.
Depending on these earnings reports, we could see the market go up or down.
It's all about weighing those probabilities, the risks, and the rewards. And that's why it's so important to do your research, understand those narratives, and be prepared for anything.
All right, homework assigned. But before we let our listeners go hit the books, let's wrap up with some final thoughts. What are the key takeaways you want them to remember as they navigate this week?
I think the most important thing is to keep your eye on the bigger picture. Don't get lost in those day-to-day ups and downs. Focus on those underlying trends and those narratives we talked about.
Don't miss the forest for the trees.
Exactly. And remember, investing, it's a marathon, not a sprint.
Okay, so be patient, be disciplined,
Be patient.
and stay curious.
Yes.
Great advice. But before we sign off, I want to go back to something you said earlier. You said the dollar is like a safe haven asset. But what if this reindustrialization thing really takes off and the U.S. isn't as reliant on global trade? Could that make the dollar less attractive as a safe haven?
That's a really good question. And it's something to think about. If the US were to drastically reduce its dependence on trade, yeah, it's possible that the dollar's role as the world's reserve currency could weaken.
Wow, that's a pretty big thought. So the very policies that are meant to strengthen the U.S. economy could actually end up hurting the dollar's global power.
It's a complex system, and it's something we'll have to watch closely over the next few years. But for now, the dollar is still the go-to safe haven, and that's probably going to stay true for the near future.
All right, so much to consider. We've covered a lot today, but it feels like we've just scratched the surface.
There's always more to learn, and the markets are always changing. But hopefully this deep dive has given you a starting point for understanding what's going on and making good investment decisions.
Absolutely. We've given our listeners the tools and the insights they need to navigate this crazy market. And hey, don't forget, you can find links to all the reports we talked about in the show notes.
Yeah, check those out if you want to learn even more.
Dive deeper down the rabbit hole.
That's right. The more you learn, the more confident you'll be.
Well said. Okay, everyone, that wraps up our deep dive for today. But, as we've said, this is just the start of your journey.
We've given you the tools. Now it's your turn to use them, to keep learning, and to make those smart decisions that align with your goals.
And remember, if you want to keep digging into any of this, you can find links to everything in the show notes.
Go explore.
Until next time, keep asking those questions, keep learning, and
Happy diving.
all right. And we're back for the final stretch of our deep dive into the week ahead, March 3rd, 2025. Lots to think about.
Yeah, no kidding. We've covered a ton of ground. Economic data, tariffs, those key levels for the S&P 500, even Bitcoin dipping while the dollar's surging. It's a lot to process, but remember, it's all connected in the end.
Right, and that's what makes it so interesting. It's not just numbers, it's like a story unfolding in real time. You've said it a few times now. Paying attention to the narrative is super important.
More important than most people realize. The numbers tell us what's going on, but that narrative, that's what shapes how we interpret those numbers. And that interpretation, that's what drives decisions.
Okay, so let's say those earnings reports we've been talking about come out this week. And it's a mixed bag. Some companies do better than expected, some don't. How do we figure out as investors which story to believe?
That's the challenge, isn't it? You've got to sift through all the noise and look for those underlying trends. Are the companies that are producing stuff here in the US doing better than those who rely on imports? Are certain industries getting hit harder by the tariffs? Those are the clues that reveal the real narrative.
So it's like being a detective, looking for clues.
Exactly.
And the more clues point in the same direction, the more likely that narrative is to take hold and really move the market.
You got it. And don't forget about the Fed. What's their story? Are they freaking out about inflation, or are they hinting at a pause in those rate hikes? That can change everything in an instant.
So we're putting together economic data, those company reports, what the Fed is saying, even those global trends like that whole reindustrialization thing. But let's be real, most of us aren't sitting here with spreadsheets and fancy economic models. We're trying to make sense of all this while, living our lives, going to work, all that.
It can be overwhelming, I hear ya. But here's the thing, you don't need to be an economist to be a good investor. What you do need is a way to understand all the forces at play and a good dose of skepticism.
Skepticism, huh? Explain that one.
Don't just believe whatever the media or those so-called experts are telling you. Question everything. Dig deeper. Look for evidence that contradicts the story. The market rewards the people who think for themselves, the ones who can see through the hype and find the real opportunities.
I like that. Question everything. Good advice for life in general, not just investing. Okay, so we've done our research, we've questioned the narratives, we've crunched the numbers. What's the final piece of the puzzle, the thing we need to remember as we head into this week?
Remember that the market is driven by people, and people are emotional. Fear, greed, hope, uncertainty. All those emotions, they can cause some crazy swings, especially when there's a lot of news and information flying around.
So even with all the analysis in the world, sometimes it comes down to gut feeling.
Not exactly gut feeling. But yeah, understanding how people think and react, that plays a huge role. Sometimes the market doesn't react to what's actually happening, but what people think is happening.
So the story, the narrative, can be more powerful than the facts.
In the short term, for sure. But in the long run, the fundamentals always win out. The companies that create real value, the economies that are built on solid ground, those are the ones that ultimately succeed.
Well, that's good to hear. So even with all the potential for ups and downs, there's reason to be optimistic.
Absolutely. There are always opportunities, even when things are tough. The key is to stay informed, be prepared, and be ready to adapt.
Couldn't have said it better myself. Well, folks, we've reached the end of our deep dive. But like we've said all along, this is just the beginning of your journey.
We've given you the tools and knowledge. Now it's up to you to put them to use. Keep exploring, keep learning, and make those decisions that'll get you where you want to go.
And don't forget, you can find links to all the reports and stuff we talked about in the show notes.
Yeah, don't be shy about clicking those links. The more you learn, the better off you'll be.
It is so true. All right, everyone, that's all for today's deep dive. Keep asking those questions, keep learning, and until next time, happy diving.